Nairobi Securities Exchange witnessed a decline in performance in the year 2023, trading 40 to 50 million shillings a day compared to 120 to 140 million daily this month. NTV's Nina Shaban had a sit-down with the NSE Chief Executive Officer, Geoffrey Odundo, who gives a clear picture of what affected the NSE performance and a deep dive on the rebound of the BIR's performance. She began by asking him why the performance of the NSE declined last year and if the slump will persist in 2024.
So what has happened with the rising interest rates in the developed markets, especially the US and Europe, the allocation to frontier markets has declined, almost nil. So we've lost an international investor into this market. So the capital has left us and moved to the US and the UK because the bonds in the US and the UK are now providing better returns. We have rising interest rates in Kenya. Today, the 91-day Treasury bill is offering 18%. So investors are saying, let me go for a quick return as opposed to waiting for a slow return in the equity market. So again, local or domestic investors are not active in the market. So two of our biggest pool of capital are not there. So we are really relying on a few retail, and that's why the turnovers are very low. And that has led to price devaluation over time. So you've seen Safaricom, for instance, which was at a high of 45, is now trading at about 13. KCB is just below 15. So that devaluation has been unattractive for investors to come in, and hence the market valuations have come down. Now, is that situation a surprise occurrence? No. We took the knock of what happened in the war in Europe. We took the knock of the rising inflation in the US and UK, inflation in domestically. People's purchasing powers have gone down. So the macro effect, the macros have hit us quite significantly. People have said, okay, I don't have any surpluses to invest. So the markets have shrunk. And that's really what has impacted on us. And don't forget, we also came off the effects of COVID in 2020. And these have had long-term effects onto the market. So we are saying the macroeconomic effects have been a big factor. We like to see a rebound. I do see some light at the horizon looking forward, and for very good reasons. Number one, as a country, we've now gone back, the IMF has actually gone back into a funding program with us, albeit the fact that it's got certain conditions, but the fact that IMF has ranked us favorably based on certain things we're doing means that it opens the doors for other lenders to come to Kenya. So people should not look at IMF in isolation. You know, we look at IMF and we look at what they're giving us and you say, oh, that's not enough to service our debts. But what IMF does, IMF sort of endorses you. So it's like that, what do you call him? A cousin who you rely on heavily for decisions. And so we do expect to see more lending coming to the country. And what that's likely to do is turn down the interest rates to some point. If interest rates start coming down, exchange rates start coming down, then the markets will rebound. Investors are already starting to see, oops, this market is so cheap. Mm-hmm. Today you can buy a share in this country, in this market, at an average multiple of less than 5. It's incredible. Markets should trade at multiples of 10 and above. Mm-hmm. So I buy a Safaricom today, I buy an NSE share today at 6 bob. When markets recover, I'll almost double my money. So the people are placing bets and saying, let's start going in slowly. So we've started seeing turnovers that we couldn't see last year. Last year I was doing 40 million, 50 million a day. I'm now doing 120, 140.
What is the status of the listings that President William Ruto promised when he got into power?
The critical path that had to be opened was the privatization bill. Now that has been reformed, and now we have got a privatization bill and going to put in place a privatization authority. That was the big hurdle in the whole privatization process for the government. And the reason is that there were very many steps required before you could privatize or even sell a single share of the government. Recently, the government also identified candidates or companies that can be listed, and that was a big discourse, as you're aware, and it's also in place. However, there's a court issue. The matter was taken to court on certain grounds, so the privatization process has sort of halted from the government side. So until that's unlocked, we can't expect the government program to proceed.
Okay. Now let's touch on the controversial maintenance fee. There was a proposal to have a maintenance fee of 100 shillings. Where is that conversation going, and was it done away with completely?
I think we didn't possibly engage the stakeholders more, and there was a very, very big reaction to that. So it was not implemented. So the markets are still, to maintain an account is free. Notwithstanding the fact that the company has to incur heavy costs of software and management, and so that's a matter that has been shelved for now. Just speaking about fees, it's important to note that this market has had among the most competitive fees across markets, because, for instance, to open an account is free. The trading account that you open with a broker, I think there are almost no charges on it. Our trading fees are still very low. So the depository felt that there was need for some tariff to help them maintain those accounts on the back of very heavy costs of investment. So for now, it's still a free service.
Now, Mr. Odundo, 5 years on, and Kenya Airways continues to remain suspended. Could you just shed some light on this? Because I don't know what this means for its investors, especially when you have a company like Uchumi that has no revenue but is still trading.
Whenever there's a material issue affecting a company, we have to engage with the issuers or the owners of the company on what their plans are. Because one of the roles that we have in the capital markets is to also ensure sound trading and also protection of shareholders' rights. And one of the ways to protect a shareholder's rights is to ensure that in event there's something material going on in the company, we have to suspend the share to give the company time to realize whatever they're trying to do. So we were approached by KQ then that they were undertaking some strategic changes in the company that would require them to really be not to come for suspension, to avoid risking or to avoid providing risks to the shareholders. It's a normal thing. So if you can either come for voluntary or there's a voluntary list suspension or compulsory suspension, but they came for a voluntary. And that was to give them time to go and reorganize themselves. As you're aware, KQ has had challenges in their performance, given again with a lot of factors. Yeah. And so the government has had a program to kind of transform their financials, and that program is still ongoing. So until such a time when there's a clear direction, I think it would be a bit, it would be important to allow them to remain suspended. Now, the risk you have when there's certain material changes still taking place in the company and you let the share trade, you open it up to, you expose it to investor risk. You asked a good question about Uchumi and why we haven't suspended Uchumi. Until such a time that we receive confirmation from the issuers that they want to undertake a certain direction, then Uchumi gets to go through that process. Right now, they're still meeting their obligations. The major issuer, who is the government, is still looking at that company, and for now we can't take a decision until there's such a decision. But KQ came through and told us that they want to go through this process, and so we had to make that process. We had to undertake it. Don't forget that the key issuer in both companies is government, and so engagements have to happen at multiple levels before a decision like that is taken.